Anybody know who Warren Buffett is? No, actually, I asked the wrong question. Does anybody not know who Warren Buffett is? He's the guru, right? He's the, he's the man. I have respect. I have nothing but respect for Warren Buffett, not because he's old, but because what he has done with Berkshire Hathaway, right? His buy and hold strategy has worked. Well, if Warren Buffett were to start today, would he do as well? Probably not, for the fact that he's selling pretty much whatever he's got. He's selling B of A, he's selling Apple constantly, and he has raised his cash hoard to $300 billion with a B. And it's all in T-bills, and he's waiting for what? He's waiting, what is his famous saying, right? Buy stocks when there's blood on the streets. Well, he did that perfectly well in 2008. He has done that multiple times in his lifetime, right? He has done that during the pandemic as well. He raises cash. He's a value investor, and then when the poop hits the fan, basically, all he does is he deploys that 300 billion cash into equities that he thinks are going to have an amazing return over long periods of time. But Warren Buffett also has an indicator out. He has a very famous indicator out, and that indicator is flashing bright blood red. Actually, it's been flashing red. Now it's bright blood red. Okay, and here's the indicator. Another thing, I talked about this quite a few times, is that at the moment, I see nothing but the generals leading this war, right? When I say war, the generals in the S&P 500, which is everybody's benchmark that they follow, and the largest 50 stocks market capitalization to GDP ratio is at a record 110%, okay? And that's the Warren Buffett indicator. So as you guys can see on the chart on the right-hand side, 50% of the entire stock market's value is involved here. Okay, so this chart goes back to 1989. On the left scale is total market cap to GDP, and look where we are, as we circled with an oval. So in 2000, right before the dot-com bubble crash, whatever you guys want to call it, we had hit 74% of GDP. Over the next decade, that index, which is NASDAQ, was minus 17%. And we just actually, a year ago, we just made an all-time high because NASDAQ had gotten to 5,000, right? And if you guys look at that chart, at the moment, in 2021, okay, so what happened when we hit 74% of GDP? We had a massive, massive drawdown for a decade. Market was just kind of, meandering. But then what happened? Then we came strong, right? We came back. That's when he put his cash into it in 2008, where was the bottom, GFC crisis, right? And then all the way to 2021, where, we had to deal with COVID as well. But at that time, we got up to 97% of GDP. Then we had the massive drawdown again. And then at the moment now, we built it back up to 110% of GDP. Now, is this an indicator that you should watch and just trade stocks with? No. But what you should do is that you should definitely pay attention to it. And the other problem that I'm seeing, because I've been watching the advanced decline line all my life, all 35 years that I've been doing this, you need to pay attention to that. It's public information. You can go Google advanced decline line, and you'll see out of the S&P 500 how many stocks are advancing and how many stocks are declining. And at the moment, all I'm seeing is the reason the indexes keep making new highs because the triple Qs and the S&P 500, the top 50 stocks, and in NASDAQ is probably top 20 stocks. Those are the Mag 7 and some other ones. Those are the generals, right? So we're going to war. We have an army of soldiers and we have generals. Well, generals are supposed to stay back. Those are the ones that run the show. Well, what's happening now is that the generals are on the attack. They're in the front lines. Look what happened to Apple yesterday. Okay, down $9 out of the blue. That's a general. It got shot. Okay, and today it's having a little anemic bounce. What I'm trying to say is that rising tide did not raise all boats, and the advanced decline line is actually kind of negative if you guys do look at it over the last 2-3 weeks. And that's why we're having a little struggle up here after we made all-time highs. And the generals, if the generals start getting shot, watch out, because the soldiers are dead already. And so the concentration of 50 stocks pushing an index up is really, really not what you want. You want all stocks participating. You want mid caps, small caps, large caps, and mega caps participating in a rally. When a rally is just construed by the top 50 stocks in a 500 stock index, which is the S&P 500, watch out, be careful. I'm not telling you to trade with it. All I'm telling you is just watch these warning signs, put a picture together, pull back a little bit, and look at some other information other than your option chain and your weekly options and how you can make a fortune or lose a fortune with those. Because these cycles, when these cycles turn, they turn for quite a while. It's not a week or 2 or 3, it's years. Okay, so pay attention to these small things.